Greetings, everyone. Welcome back to another Market Open live stream. Today is my birthday, which marks 1 year from the GameStop crisis that led GameStop go to like $480 a share, only for Robinhood to halt trading on the stock. Current meme says that because Robinhood missed on earnings terribly and guided like 25% lower, the best thing Robinhood could do right now is halt trading on their own stock. It's been going straight down. But anyway, folks, we got to talk about some news that came out over the last 24 hours. I did a video earlier this morning around 4 a.m. looking at 6 different indicators that you should be tracking. We're going to be talking about one of those in a little bit more detail. But if you want to see the other 5, make sure to watch that video from earlier today. Really good. I'd pay attention to all 6 of those things, write them down, and watch for those changes. Because in my opinion, when you get changes in the 6 indicators we got to watch for in this economy, that's your buy indicator. That's when it's time to buy. But anyway, so just my opinion. Let's talk about a little bit of news that just came out here recently, and that was that core PCE personal consumption expenditures came in at 4.9%, slightly higher than expected. This is another version of CPI readings that the Federal Reserve likes to use. They prefer PCE over CPI, but obviously they look at CPI as well. And one of the reasons the market actually moved slightly to the positive side in it, or after the report came out, in my opinion, has to do with the fact that if you go to the actual report, which most people don't actually go to the report, but that's okay. That's what you're here for. You go over here to what happened in December, and you actually had what feels like potentially a little bit of softening on the month-over-month data. So the month-over-month data right here came in at 0.4%, which would be indicative of an annualized inflation rate of approximately 4.8%. Relative to this 7.2 that we've had in the prior 2 months. So I believe that has led to a little bit of temporary optimism. I do believe that a much bigger catalyst is actually going to be the CPI release on February 10th. However, this data could be setting up for a little bit of a head fake because we did see Omicron fears start really taking off in December and some spending pullback because of Omicron. So personally, I think it wouldn't be surprising for us to have a little bit of a temporary slowdown in inflation, which could potentially be a little bit of a fake out to where we end up, having worse inflation in February again, which won't get reported until March 10th, which is going to be right before the March 16th meeting. So in other words, if inflation is kind of done, let's see, it hasn't really gone that straight. Let's see if inflation is kind of done one of these, and then the summer of last year we had a little bit of a void here, and then we skyrocketed on inflation. I wouldn't be surprised that Omicron does a little bit of this, and then the question is, do we go this way? Do we go this way? The hope is that we go this way, right? That's the hope, the green line. We want to go down. The concern would be obviously any kind of inflection this would be devastating if we had rates actually, or inflation rates, go up at even a faster pace. But somewhere here is a moment we're going to want to pay attention to the inflation rate on. But anyway, that's potentially a reason we had a little bit of excitement in the market today. To start with is this 0.4 number here, which is good. It's certainly worse than rotating the opposite direction. Now, this morning, one of the things that I talked about had to do with Apple. And I want to provide some additional clarity since there's some folks who are confused about what I said about Apple. I said that Apple has been dealing with worsening supply chain constraints. However, Apple themselves have started figuring out how to work through those issues better, leading Tim Cook to say that it actually looked like supply chain constraints were expected to potentially be better in Q1 here, the first quarter of 2022. And I say that because technically Q1 of 2022 is Apple's Q2, which is really confusing. But it's worth seeing exactly what he said in the transcript because there's a lot of confusion around this, and I like clearing up confusion. See, in the transcript, he said, we talked about it on a year-over-year basis in terms of their revenue growth, or the chief financial officer here says. And as Tim was saying, we still expect significant supply constraints, but less than what we've seen in December. Okay, so let's come back to that for a moment because this is pretty critical here. Over here, they talk about iPad, where they talk about how supply chain constraints have held back sales on the iPad. And here they do mention the following. Take a look at this. They say, we experienced supply constraints that were higher than in the September quarter. So in other words, they're kind of drawing this picture that that maybe supply chain constraints potentially peaked here in December, where if this was September, here's December, and that maybe things will get better in the first quarter, which would be great. However, it is worth noting that this level, what this arrow is pointing to, is still being called a significant disruption. That is their word. That's not me. Like, some people are like, oh, there's Kevin trying to spin a narrative. Like, no, I want the market to go up. I promise you, revenue of everything goes down in a recession. But like, I don't want to go in a recession. I want to go into the moon. I want to see the indicators that the red flags are gone, and then we're going to the moon. Just this morning, I released a 35, I think it was 35, maybe it's like it was somewhere around there, 35-minute lecture to all course members, talking about the psychology of market cycles, macroeconomic cycles, and how when we're at the top or the bottom of economic cycles, and when we transition, that is when we come out of a bottom or we turn at the top, people get very angry, because it's a huge change. And there's obviously a whole lot more, but it's very common when macroeconomic cycles shift, that emotions change, and then strategizing for those is very, very critical. And that's what we were talking about. But anyway, and if you're interested in those programs or seeing that video or whatever, there's a coupon code that has expired today. It is my birthday after all. But folks, it is so critical to, in my opinion, take your head out of your butt, so to speak, because some people like to do that, and realize that they're still saying we still expect significant supply constraints. That's huge. Sure, maybe a little bit of an inflection point, but wait a minute. When are we going to be solved with this? When is this actually going to turn into prices potentially coming down rather than going up? That's the big question for Apple. And the other thing to consider when it comes to Apple, which is also very rarely considered, is that Apple is the biggest freaking company in the world. So when you look at one of their suppliers, I wrote this down here, ST Microelectronics, NV, which Apple is one of the major customers for. They provide chips for Apple. They said, literally today, they said they do not see a let up in the chip shortage before 2023. So, it's so easy to hate on facts because people like to read titles and then draw a quick conclusion because that's easy. But then when you actually dive in and you're like, crap, still expecting severe or significant disruptions at Apple. They're the biggest company in the world, so they should have the best priority in getting chips, which means everybody else could still suck. But even their suppliers are saying they don't think chip issues are going to get better until 2023. That is a problem. That is dangerous, and that's just something to pay attention to. Now, worth jumping over to the stock, because the stock's actually doing decently along with the Visa, and that's because consumer spending is up, and people see this as bullish for these companies. In other words, oh, yay, let's all go throw money at Apple or Visa, because obviously spending's up, people are spending more money, so these companies should do well, and they're probably best positioned. Well, Apple's certainly one of the best positions for navigating supply chain constraints. That's true. But what happens when and if Apple, rather than becoming a flight to safety, becomes something where folks like institutions start getting a little bit more nervous, and then they start selling Apple or the Microsofts? That is a situation we do not want to get to. So what I highly recommend you do, no matter what side of the fence you're on, is pay attention to Apple. We got to make sure the uptrend on the Apple stock from the pain that we experienced on Friday continues. And we got to make sure that these prices hold at 160 or potentially get better. The last thing we want to see is that we start breaking lower levels, which in my opinion would be breaking under the 150 levels. We start breaking some of these, not ideal. Certainly if we were to break 135 and we started breaking some of these supports, also very, very bad. Now, S&P 500 is still holding supports, so S&P is just another one that you could take a look at. It consistently hops off of the 430 line. Again, if you do not have basic TA drawn on your charts, I think you'd make it a little oopsie doopsies. But anyway, you could clearly see the bounces towards the end of the day here on the S&P 500. 1, 2, 3, 4 bounces here off of 430. Look at the pre-market here. Bounce, bounce, bounce off of 430. Break. What happens when we break? Technical analysis says we generally drop to the next level of support. Not a surprise. 426. These lines have been here for months. They haven't changed, and that's because they work really well. In fact, at this point, I should really just upgrade these lines I guess I've kind of been a little lazy and haven't. So I'm going to upgrade them really quickly because these are quite powerful. There we go. I'll leave this one as a little thinner since the 430 is more appropriate. So we'll see. We'll see how the day goes. Keep in mind, usually you're going to get folks like Jim Cramer at the beginning of the day playing the violin for us. And I don't want to be a bear. I just always want you to be aware that there are red flags in our macroeconomic cycle. And these are red flags that we thought would go away. We thought inflation would be transitory, right? Or maybe not. Maybe you didn't. You might be thinking, I didn't think it was transitory. That's fine. But it used to be that 60% of people thought inflation was going to be transitory and 40 didn't. That scale has tilted so much so that I would say maybe 10% of people still think inflation is transitory, right? And that's what's getting priced into the market, is the fact that you're getting this realization. Now, that doesn't mean we shouldn't have been investing the last year. I mean, if you thought inflation was definitely going to be out of control, starting at the end of 2020, you would have missed out on the gains that were available in 2021, right? Now, what do we expect for 2022? Well, now the red flags are becoming a little bit more clear and apparent to everyone. And so that's what's getting priced in. Now, Jim Cramer is playing the violin, saying that, no, we're coming in for a soft landing, that interest rates won't do anything, that really let's just wait for the supply chain issues to settle down. That's fine. We should wait for supply chain issues to settle down. But as long as consumers continue to pay higher prices, prices are going to continue to go up. And that's the problem, is consumers are not saying no. So until consumers start saying no and prices start going down, we're going to continue to see inflation. I kind of agree that I don't think rates are going to do anything, but that's not a good thing, Jim. That's a bad thing. If Jerome Powell's like, wow, damn, we raised rates to 0.5% and it did nothing, after 6 months or whatever, they raise rates to 1%. And they're like, oh, it did nothing. We still have an inflation problem. What's next? 2%, 3%. It's a problem. In fact, Bank of America is coming out saying that they expect the peak of the federal funds rate to be around 2.75 to 3%. Bank of America had a pretty bearish outlook. The problem with that is if we go on over to the SEP, let me grab the SEP quickly. You better be a student of the Fed in this environment. All right. So SEP for December, it's a summary of economic projections. We want to go to the little chart here. Here we go. All right. So let's see what it says here. So for the long run rate, the Fed funds rate, the Federal Reserve had been projecting in December a longer run rate. Oops, that's not a highlighter. Longer run rate here of about 2.5%, or a range of 2.3 to 2.5% in the longer run. Bank of America is coming out and saying, yeah, no, we're thinking 2.75 to 3. I'll put B of A right here, which is obviously a little bit higher. So the market's, potentially going to be a little bit nervous about that, but we'll see. We'll see. Now, let's jump on over to see how we're getting ready to open. So we talked about PCE. We talked about Apple, some clarity here. We've got the Dow down almost 0.25%. S&P is pretty much flat at negative 0.02. NASDAQ 0.22 to the upside. Oil continuing to rise. The dollar had an incredible rally over the night. Brent's at 91. Oil's at 88.3. The dollar did very well, and it makes sense because, well, yields have been rising. The 10-year right now is sitting at 1.82. And this is attracting a lot of investment into the US dollar, and that's exactly what we're seeing. But anyway, Bitcoin. Let's go jump on over, take a peek at Bitcoin. We're gonna go to our sponsor for today's video, FTX US, which you could sign up for, and if you use the referral link, get 10% off your trading fees. Go to metkevin.com/FTXUS, link down below. But anyway, we see that crypto has been relatively stable for about, this is on the 30-minute chart here, so rotating back to really the beginning of the week, which is quite interesting how we've been in this channel here. We've had brief moments here of overselling, but relatively stable. And usually when we're in these consolidation patterns, there's a concern that over time we will see a breakout to either side. So just something to keep an eye on. We'll obviously come back to this and look at this a little bit more, but let's go out to the hour chart. These are the sort of breakups or breakdowns that we're used to seeing, and they come suddenly, they come fast. You can see them pretty clearly the way the chart's set right now. And with this consolidation here, we're really setting up for either the up or down leg move. And that's what everybody's sort of waiting for confirmation in terms of, well, all right, which direction we going? What are we going to do? What are we going to do? Anyway, I do want to just reiterate and be very clear that Apple and people spending more money is not good. It is a sign of potentially more inflation to come. Just worth noting. All right, so S&P doing nicely right now, up about 0.22%. That's actually a little bit of a boost over what the S&P was showing on CNBC, having the S&P slightly flat. Nasdaq up about 1/3%. We do have, I think ARK is actually down in pre-market. No, it's flat now. Good. Okay, ARK went flat in pre-market here. And we have Tesla rotating down about 0.5% pre-market. Most of pre-market, Tesla was actually doing quite well. It was, sorry, the coffee is at the perfect temperature right now. Anyway, yeah, Tesla was up like 1.7% throughout much of the evening hours, and so was Apple was up like 5 to 6%. Oh, that's cool. They give you little birthday balloons on Twitter. Take a look at this. I wanted to show something on Twitter. Let me see if it does it again. Look at that. I get birthday balloons today. That's cool. But I did want to say this really quickly. Tom wrote, if you're not buying Tesla at this price, you shouldn't be in the stock market in general, which I thought was kind of funny because I wrote agreed. And people are like, oh, does this mean Kevin's buying the dip? Yeah, whatever. And so I had to write a clarity post. Quick note, apparently some are missing the irony here. I am out of the stock market. In other words, if you're not buying Tesla at this price, you shouldn't be in the stock market. Agreed. But, that doesn't mean I don't want the market to go up. Let me tell you, I just want to be critically clear here. People are like, well, why are you cheering when the market looks like, there's good news? Because I like a good economy. Dude, people don't like every YouTube ad revenue goes down, which I've been posting less videos. People are funny. They're like, "Oh, Kevin's just posting videos to make more money." It's like I've actually posted less videos in the last 30 days on YouTube than I have for the last year in any month. That's mostly because I'm working on the new course, The Path to Wealth. But boy, oh boy, good economies are nice. Everybody wins in the good markets. It's the tough ones or the potential bear markets that you want to be a little bit more careful for. You don't want to be stuck like Japan, where you end up investing in Japan in the mid-90s and you don't break even for 20 years, or what happened in the 1960s, where you don't break even for 16 years if you invest at certain points in the, early 70s, or you invest in the dot-com bubble and it's 15 years before you break even, or you invest in 2007 on the first dip and it takes you 5 years to break even. People are long-run investors until they realize that could potentially be on the horizon. And all I'm gonna say is, where are we on the macroeconomic expansion cycle? Noah here is saying, LOL, we aren't Japan. Well, duh, our economy is much stronger than Japan. We still have growth. Population growth is slowing a little bit, but it's nothing like Japan, where your population just straight up decline. Don't get me wrong, I am all for Train America, but most of the examples I gave here, dot-com bubble, 08, 70s, were U.S. examples. Okay, 3 of the examples I gave were U.S. examples. You picked up on the one example that I used of Japan. Okay, it can happen in the U.S. too. All right. Anyway. Steve says we're in 2003 to 2004. That kind of implies more mid-cycle. I hope so. All right, folks, we got the bell coming up. Tesla rotating positive here. So let's see if this ends up being another fake out rally, or if we end up getting sustained enthusiasm to finish the week. I would like some sustained enthusiasm throughout the week. Although what we've seen is, when we get a rally at the beginning of the day, we get a sell-off at the end. When we get a sell-off at the beginning, we get a rally towards the end. That inverse is pretty typical. So this could be setting up for the shorts to load up again.
Phillips is excellent. There's the opening bell on this Friday in the CNBC Real-Time Exchange. At the big board, it's online sports betting and gaming company Super Group, celebrating a listing via SPAC at the NASDAQ from Mark Schonwetter Holocaust Education Foundation. So I guess
Okay.
what is
It actually indicates that we're only like 35 to 40% green there. And I just got an update here that apparently, this is quite interesting. A major bridge in Pittsburgh has collapsed hours before President Biden is scheduled to visit the city to tout his signature bipartisan infrastructure law. I hate to say it. Usually I'm not that jaded, but that sounds absolutely rigged. Like, really? Hours before you're going to come talk about infrastructure, a bridge collapses? Wait, let me guess. Nobody got hurt too? I don't know. I don't know that one, but I hope nobody got hurt. I mean, whether it's rigged or not, I hope nobody got hurt. Yeah. Bridge collapses under heavy snow. Okay. 10 people did get hurt. Okay, but non-life threatening. That's good. Okay. Well, that makes me feel a little bit better, but that is either a very odd coincidence or, it's sus, but whatever. Anyway, 10 people got hurt, but nobody seriously injured is what the story is. So I just want to clarify that. Maybe I'm being a little overly jaded, but anyway, nice green right out of the gate here. S&P, ARC G, QQQ, nice green rotation. I imagine a lot of that is going to be, oh my God. What the heck? Hold on a second here. Oh, okay. Yeah, no, that hasn't fully updated yet. Oh, there we go. Okay. So anyway, so we got Visa. Look at that Visa jump right here. That is a nice little rally we're getting here. So nice rally popping off on Visa. Looks like Apple. Nope, Apple rotating down. This is my concern, is that these rallies get sold off, and as soon as we get a little bit of green, that's where the shorts make sure have the opportunity to dump. Let's see what the hood of the Robin's doing over here. Oh no, Robinhood's rising. I mean, that's honestly a good thing. I have a YOLO option that I'm going to be closing on, but that's good to see Robinhood moving up here. You've got Owlet going 5% to the downside here. That one's just getting smoked. Xpeng down 5%. Lucid, look at this. Lucid heading down almost another 5%. That's incredible. Neo, wait, where's Neo? Neo's over here. Matterport's about to be under $8, folks. Yikes. Neo's mixed at the open. Okay. Financials, look at JPM move down, folks. Look at JPM move down. That is not good. People are making videos about how, you want to be safe investing in the stock market during an inflationary time, buy the financials. Folks, be freaking careful. Like, seriously, be careful, because the market does not have to, reward financials. They will say, but inflation is good for stocks, right? Not necessarily. Because inflation, while in general should be good for stocks and real estate, if it's coupled with the Federal Reserve getting more and more aggressive because their actions aren't doing anything, it's bad. That would be bad news. So pay close attention. Okay, Apple rotating down. Enthusiasm of the morning already being sold off this early. That is quite an early sell-off. I was not expecting that. Now, keep in mind, a lot of retail buyers buying in the pre-market. Stop buying in the damn pre-market. It is the worst time to buy. I don't buy. I rarely buy in pre-post market. I would say I'm probably 3 times as likely to get screwed buying in the pre-market than if I just buy when the damn market's open. I hate to say it. But anyway, I again, I want to be very clear with the biases that I have. I have very few shorts in the market right now. I only have a Lucid short. That's all I have. It's like a 30K Lucid short, and then my Robinhood put thing, which I'm going to close. Lucid is rotating down more, down about 9.4% right now. These candles are getting worse right now. Lucid's getting worse. Neo's about to break 20. This is going to be an all-time low. Matterport is trending down even more. So is Rivian. Upstart is a momentum/trade stock. And so seeing this one fall generally doesn't bode well for momentum. Folks, NVIDIA, oh my gosh, 215. Look at this, folks. Look at the Fibonacci. We are literally following it's not a perfect fib. It's not perfect, but look at it over here. Okay, we draw the line from the bottom here to the top. Look at that. We sit at that 38.2. Well, I drew it upside down, idiot. But whatever. I think I've actually mentioned that before that I drew this upside down. It doesn't really matter. We fell over here with the upside down fibs working. And so we're here. We had a channel. Here we rode our support, bounced here, broke, bounced off here, collapsed to here. And so the concern is now that we're rubber banding at this level, the concern is that the next stop could be 199 for NVIDIA. Thank you, by the way, for all the happy birthdays. I really appreciate you. Y'all rock. Thank you. And Apple is now only up about 2.5%. This is one of these 6 indicators. If you have not watched the video, which there's probably a good chance you have not watched it because I posted at 4 a.m. I've been up since 2 a.m. Studying, researching. I do this. I don't sleep a lot. I slept 3 hours. It was a problem, but that's what I do. See, like lately, there's been this trend, and I try not to get frustrated by it, but there's been this trend of people watching like what I say about the Federal Reserve. And I spend, how many endless hours a day studying the Federal Reserve, and they'll watch my video on the Fed, and then they'll post a video just regurgitating what I said in their own words in the same order that I talk about it. And then it's like, come on, man. But that's okay. I'm not going to get salty. That's how YouTube works, okay? But the downside of that is, like, the other way is actually smart. What the other creators do, and I'm not saying everybody, but it's smart because if I say something and then I get hate for it, the others know not to say that. If I say something and I get praise for it, like the first Titanic video or whatever, everybody shares it and loves it, right? So it sucks being on the freaking front lines. Okay, S&P heat map. Look how red that just turned. Look at that. We're basically turning 80 to 90% red here. Ugh. Ugh. That's not what we want. Oh gosh. This was my indicator of potential problems, is that you can't just YOLO into Apple right now. It makes me nervous. Affirm is selling down after the Visa partnership. Talk about how good the debit card spend and such is going. I mean, it's really incredible. Neo folks down 4.7%. Robinhood actually recovered a couple percent. I don't think it will all day. I could be wrong though. This is the difficult thing. This is the problem with short-term options, is like trying to time it. But this initial buy the dip here. Look, I made a mistake buying Robinhood. Okay, I made a huge mistake buying Robinhood. But I know I can't say I know. I don't think it's going to get better anytime soon. Lucid's down 7% right now. My goodness. Matterport down. Look at that. Matterport broke 8. This is terrible. Somebody mentioned, they're like, "Oh, Kevin, you were just kind of like talking about how it's possible while Matterport was at 13, how Matterport could go down to $8, $7 or $8." And it's like, wasn't expecting it to happen within 5 days. And Nancy Pelosi's husband screwed Roblox. No, dude, it's Jerome Powell screwed Roblox. Holy crap, dude. Roblox is half of what Nancy Pelosi's husband paid. Oh my gosh. We will, just so you know, we will be having another course member live stream today. In the course member live stream today is going to be dedicated to out of the money put options, which tend to be very expensive tend to be very inexpensive if you look in the correct places, and can serve as a recessionary hedge. So we're going to be talking about that in detail, going through some samples and going through what I think might be some potential hedge tools. Because remember, whether you're in the stock market or whether you're in cash, hedging yourself to a market downside is not a bad idea, because if you do have a big market downside, it gives you more cash to buy the dip with when and if things continue to fall, right? This is why I spent $3 million buying SARK in November. Now, I was an idiot and listened not to my gut, but to community the community getting mad at me for having the short position. People thought I was driving down the market by having a swap position, which is what SARK is. And I didn't hold on to it. I wish I had, because if I did, that I would have been up, $1.2 million right now in that position. But woulda, coulda, shoulda. It's very important. Trick. Okay, this is another thing from the Psychology of Money group. When you have those woulda, coulda, shouldas, write them down or put them on a little Post-it note. You should all have little Post-it notes. I actually prefer the larger ones. Write it down, pull it off, put it in a drawer, and then that way you could have a collection of all your screw-ups in that drawer. And then anytime you think about that negative thought again, you just tell yourself in your head, nope. I already have it written down. I don't have to remind myself of it. Warren Buffett does that too. Is really, really important. You do not get yourself caught up in like losses or mistakes, because Apple's going back up a little bit, because what happens then is you potentially start trying to gamble your way back. Very dangerous. But anyway, a little bit of a U-turn here on Apple right now, which is good. I do want to hit the news as well, although we did start with the news. Visa still pushing down a little bit. Apple trying to push back up, bouncing off about roughly 163 here. Triple, let's see, SQQQ up about 1.43. You've got Affirm's only up about 0.5% right now, so still seeing that sell down here on Affirm, unfortunately. If we go to Enphase, I got an alert that this was down about 3%. Yep. It is just over 2%. Cardano is about to break $1. This is a huge line for Cardano. We've been rubber banding around it for a while. Robinhood just had a nice recovery. Not so good if you didn't close out your put yet. This is the theta decay will eat you up. Matterport still sitting at 776. Lucid plummeting, absolutely plummeting. 9% to the downside on Lucid. Not good. Cloudflare is down about 3% today. Wow, 77. Tesla, folks. Oh my gosh. Tesla might actually fall under, yep, there you go. Sam says it. Might actually fall under 800 here. That is incredible. Okay, you got to be careful with this one, Shawshank. So the issue with this, okay, because I agree with you. I agree with you, but there's a problem. There's an asterisk with this, okay? So what you've stated is don't blame the market, blame the investors buying absolute garbage stocks that are hyped. Okay. So there are two things. Well, there are a few things here. First of all, even quote unquote garbage stocks like Lemonade, which have been performing terribly, have intrinsic value. Lemonade has $1 billion in basically free cash sitting on their balance sheet beyond their liabilities in that. Lemonade has a lot of freaking cash around. And they are a great company. They're just not a profitable company right now. They are also in a potentially unprofitable business. Their path to profitability is questionable, right? And so Lemonade, don't get me wrong, had an insane momentum movement. The darn thing ran to I think it was $170 at one point. That's stupid. That's stupid. That's FOMO. That's dumb. Lemonade at $55, I didn't think it was terrible. Now I sold my Lemonade at 65 to 70 and took options profits in between. So I'm net up on Lemonade. And I'm glad I'm out of it. But some of these companies do have intrinsic value. Now, that does not mean that Lemonade cannot go have where it is now. It could go to $15, or it might be $29 now or whatever. It could go to 15. That's just like Matterport. Matterport is not a garbage company. Matterport is a phenomenal company, but it could go to $3. It could be a penny stock. And that's because in bear markets, things correct to the opposite side. You get FOMO on the way up when things get ridiculous. And then you get basically just F on the way down, fear, and things do oversell. But that does not mean, we're for sure at a bottom. Jim Cramer's calling a bottom. But then again, I feel like Jim Cramer's always playing the violin that we're at the bottom. Remember, buy Bear Stearns. Buy Bear Stearns at $50. You'll be fine. Your money is good with Bear Stearns. Okay, in case you don't remember that reference, it went to $10 6 months later, which was 1/5 of the value when it got bought out by, I think it was JP Morgan. But anyway, you can look that clip up on YouTube. And people make mistakes, so I don't want to bag on Jim for making a mistake. I just want to say, be careful. The popular thing, and this is something for you to know too. This is critical. I'm all about this because it's part of the psychology. On YouTube and on Twitter and on the news, it pays to be a bull. It pays to be a bull. more people come to your fund, more people invest in your products or whatever, more people watch you, more people like you, more people say nice things about you, more people spread your name. Everything is better when you say good things. You want thousands of followers on Twitter? Go on Twitter every single day and talk about how you bought the dip, you're still buying the dip because Tesla's going to the moon. That's all you have to do to get followers on Twitter. You say bad about Twitter or Tesla on Twitter, you'll get reamed. Okay? It is very, very unpopular. So when you consider that psychology, you are going to get a social media bias and news bias, like media bias, to the upside. Always. It pays to be a bull. Okay. Anyway, so I cannot believe that Lucid is down 9.86%. That's incredible. I mean, it's $25. That's insane. Well, my put on that one doubled. Okay, let me go to a little bit of news. I'm gonna just grab the term. I want to see what the suits are saying. Let's check in with the suits. How long have I been saying Lucid was going to crash? And I was one of the first, like, excited folks about Lucid. I went in heavy at like 1170 on this thing, and I held this thing through the crazy rides. But I don't have any Lucid now because the insanity of where we went was just not so. Anyway, sorry. And I bought Robinhood. I was wrong on Robinhood, right? So I could be right and wrong. I just try to be right more than I'm wrong. Okay. Anyway, okay. Listen to this one. This is an interest. This is the very first update from the suits here. Okay. Okay. Let me wait quickly just on psychology. Somebody says, you're right, Kev. I run an Instagram page for crypto, and I was telling everyone a drop is coming. Be ready. Everyone flipped out on me, and they asked, what's going on? That's literally. It's this, folks. It's this right here. Look on screen right now. Like, I don't, if you're in like listen only mode, please look at the face right here. See this face? Look at this guy. That guy's pissed. You know why he's pissed? Because it's emotions. See, when you start getting selling fever right before the blood on the streets where everybody's freaking the F out, look at the face they chose to put there. It's a really good cartoon. People get pissed. Nobody wants to hear that. Okay. Just saying. Anyway. Okay. What were the suits saying? Okay. Investors to take some chips off table after high drama week. Okay. So before I read this, in fairness, Kramer on CNBC was talking about this morning how institutional investors are 10% less exposed to the market now than they previously were. So this is nets. So they're 10% out of the market, basically, more out of the market than they had been. We don't, Kramer's saying that's a sign of the bottom. A lot of people are like, that's a sign of the turn, right? I talked about that. You really got to watch the video from this morning, but I talked about this in the video this morning too. And then I want to read what these suits are saying here. But really watch those 6 indicators from this morning. But people keep sending me pictures of this on Twitter, and they're like, but Kevin, the RSI is oversold. We're obviously the indicators say we're oversold. Yeah, we were oversold when the S&P dropped 10% before it dropped another 30. Okay, just saying. Okay. So just be careful. Okay, make up your mind in terms of what strategy you're going to play with, and write down when you're going to buy back in. You don't want to be out of the market for the long term. That's a big mistake. Anyway, fixed income investors are tired. Profit taking and rate locking may be the path of least resistance in the treasury market today. Okay, that's in the treasury. Oh, so that's because of the high drama week as a hawkish Fed flattened the treasury yield curve to the lowest level since before the pandemic. That's bad, by the way. The move may inspire some investors to take chips off the table ahead of the resumption of Fed speak in the week ahead. Okay, Fed speak is the period after the FOMC meeting where all the board members start going on the TV interviews and they're like, yeah, I think things are getting better. I think things are getting worse. And then you get the doves and the hawks come out. Am I waiting for March 2020 lows? No. Folks, the answer is not a number. The answer is not a number that you're looking for. We could go past March 2020 lows if we go into a recession, which people think is insane. But remember, we had an infinite bailout at the bottom of March 2020. We could easily fall way below that unless we get a Fed bailout, right? So you got to pay attention to the Fed, and CPI is your buy signal. Anyway, my opinion. Fed speak is going to be interesting because the doves and the hawks will come out. We'll see. But anyway, that will, okay, volatility. Profit taking has been seen already in early New York trading after lower than expected print, blah, blah, blah. Profit taking, yep. U.S. stocks torn. Yeah, U.S. stocks are torn between Apple hope and inflation fears. Apple giving NASDAQ an advantage. Chevron is getting knocked after it was unable to fully benefit from rising oil prices. Yeah, well, because transporting it is a problem too. Blah, 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 blah. Yeah, okay. Well, not too much on that particular bench. All right, we'll keep hunting. Let me go just take a quick peek and get an update here as to what the sticks are doing here. Great Depression coming. People will be very depressed when the market goes down a lot more. See, here's the issue, okay? I just want to say this. Do you want to go, like, if we go into a bear market and you spend the whole way down trying to buy the dip, when you get to that lower half, you're going to be out of money. So people are like, but Kevin, you've always been Mr. Buy the Dip. Yeah, that's because we didn't have glaring red flags of a macroeconomic shift. Whatever. Okay, SPY has turned negative. S&P 500 is actually down 0.4% now. That's crazy. That's a complete U-turn from what we had when we opened. Volatility index up. Apple is holding on over here, and so is a firm trying to hold on and not fall more. Google's basically flat at 25.88. Which, how long has it been here at 25.88? Well, I guess it was last at 25.88 in July. So it really took off in 2021. 2021 was a great year for Google. Okay, Lucid not as bad as it was. Lucid has recovered a slight little bit here. It's still down 8.5%, but it is trying to bounce off at 25.64 here. Arcimoto's almost a penny stock. Look at that. It bounced off $5 again. Under $5, your penny stock. NEO. Oh my gosh, NEO's at $19.49. Well, folks, you need to know this. If the U.S., and I should quickly say, today is my birthday. Thank you for those of you still wishing me happy birthday. Yes, that does mean there's a coupon expiring. Look, it's simple. The price goes up over time. That's it. You get lifetime access. So, you know, when I buy back in, you're gonna know. We'll be talking about it a lot. But anyway, here's the thing about China. We got to talk about China. If the U.S. goes into a recession, which can start as a paper recession of GDP decline, and then when the Fed doesn't bail out the paper recession, we will go into a real recession. We had a big debate about this in the course member chat too. The difference between like paper recession and real recession, how one could lead to the other. Anyway, if we go into a recession, which I hope we do not, I like I said, I do not want to go into a recession. Incomes falter. We lose time. It sucks. China's probably going to be way worse off. China is struggling so much right now that they are stimulating the economy. They are cutting rates. Okay? They are cutting rates because they're so worried about the defaults that started with Evergrande. Evergrande was not the iceberg. Evergrande is just the fact that there is ice in the ocean. You know, it's not the iceberg. It's just adding to the pain. It's making the water cold, so to speak, for the Titanic, right? Which could worsen the downside. But I do think that, and this is why I've been so nervous about Chinese stocks for the last 2 or 3 months. I've just not been in them. Is I worry that the downside could be more outsized for Chinese stocks, because the Chinese consumer is a lot weaker than the US consumer. If I had to bet on an economy right now, I would 100% bet on the US economy, for the long term, way more than I would bet on the Chinese economy, especially with the Evergrande overhang. But again, if the US goes into a recession, the world's effed. That's it. Just saying. For the short term. Somebody's moving into an oil ETF, wondering if it's okay to hang out over there. Look, I can't give financial advice. Y'all know that. Personally, I am just so unaware of what moves the commodities markets. I won't invest in them. If I were to invest in the commodities markets, I would only invest in them with a stop loss. That is the only way I would invest in commodities. And I would probably use a trailing stop. So, I'd set like a 3-4% trailing stop. So that way, if we keep moving up, oil goes to $100, you're able to take those profits. But I would absolutely stop out of oil. It's been the flight to safety. Flight to safeties don't last long. Things that used to be a flight to safety turn into the next capitulation stage, which that's why I'm watching Apple. Again, watch my video this morning. Like Apple's recovering right now, which is good. I mean, this is just the minute chart, so you get these insane vacillations. I'm more worried about the second half of the day. I hope we end the day like net up, because that would be a good sign. People could chill over the weekend. Maybe emotions could calm down a little bit. Maybe crypto could rise again. Thank you to the sponsor, medkevin.com/FTXUS, for helping us track those crypto prices. But anyway, okay. Let's get a little bit more news that's going on. I do want to just quickly take a peek at some individual sticks before we do. Specifically, a firm has now gone negative. This is okay. That's bad. That's bad. Why is it bad? It's bad because it means we had great news on a firm from Visa, and what happened after great news? It sold off. It gave people an opportunity to short and to sell and to get out, which people instantly did upon market open. Bad sign. Apple is still right now being seen as a flight to safety. Is Dogecoin a good hedge? No. Crypto is not a hedge. Crypto is absolutely not a hedge. Not financial advice, but crypto is not a hedge. Yeah. Somebody here says institutional investors are waiting for the fear to end. The fear ends when Jay Powell says the fear is over. Somebody here donated $5 to say, meet Paperhand Kevin. Shout out to you, Smart Fusion. Okay. Tesla. Let's see here. Ooh, look at that. Tesla's trying to get back into it's back in the 8s. Tesla went to 808. Hey, like an 808 drum. Isn't that in an Avril Lavigne song? Anyway, we fell to 972 there. Now, even though we're at 808, we're still down on the day. Oh, see, Lucid is going back to Lucid trying to recover. These little false bounces, they're getting sold, man. Look at Matterport. All-time freaking lows right now. All-time ever freaking lows happening right here on Matterport. Great damn company. Don't have a penny in it right now because it's too risky. And look, I know that was a U-turn because on Wednesday I thought we might get short covering. The fact that we got more shorts and not short covering is news, first of all, because usually hedged events we get shorts reduce their positions. The fact that it went in the opposite direction was another red flag. And I think it's stupid not to react to red flags that are a sign of a macro change. Not like day-to-day dips, like the market dips on election fears. Man, buy the dip. Buy the dip on February. Buy the dip in May. This was all nonsense because the macro news was positive. Got to know what drives the market. Dude, AMC's at $13 and plummeting. Holy crap. Oh my gosh. Beyond Meat, $54. Enphase, $114. Shift Technologies, $1.85. Some of these are just dragging the anchor along the floor. Tesla's still down 3%. Hey, that's my area code, the 805. You know, I never thought I'd see Tesla at the 805 again. You know, and they just installed a Megapack facility in the 805. Oh, wow. Dino just donated $50 to say, dude, if it wasn't for you working like a robot, I wouldn't be as wealthy. You got this, and we were with you. Thank you, man. Thank you. Coca-Cola is the safest stock right now, says Chrysos93. Were you born in 93? The early 90s were very nice. What is Coke? KO, right? Yeah. Yeah, look at that. That's nice. It's a Buffett stock. It has become a flight to safety stock. Look when it became a flight to safety stock. Oh, hold on. What's CNBC reporting?
Yes, these are the January final numbers. So we take the mid numbers, we toss them, and we now make these the final read. 68.8 expected. Well, 67.2. So we take that mid-month read, which was 68.8, and we move it down to 67.2.
That is a miss on consumer sentiment. Not ideal. All right, we're gonna pull off this. So what was I gonna say? Oh yeah. Oh yes. So be careful with the flight to safeties though. Okay. So yeah, because the flight to safety does not last forever. Corsair dips getting bought. Visa flight to safety. Yeah, again, with the flight to safety. But yes, Visa is also that. This chart does not say the Corsair dips are being bought. Maybe on the one. No. But thank you for the high dollars. I'm at the point where I just want to start shorting every stock. Okay, look. I hate this market, man. I hate this shit. Look. Buy the dip. Okay? Becomes. This is an evolution, okay? It's normal. Buy the dip. Well, first, hold on. You go, this is your sort of sentiment, right? YOLO, FOMO, buy the dip. This is sort of the chart of sentiments. YOLO, FOMO, buy the dip. Then you get to damn. And dip keeps dipping. Dip keeps dipping. Okay. Then you get to sell. Then you get to short. Then you get to bottom. Okay. And right now, I think the vast majority of retail is here. Sorry, you can't see that there. Oh gosh. Dude who called Kevin Paperhand is too lazy to make decisions for himself. Oh, thank you for that, Taylor. Yeah, I do wonder how SoFi REITs until fear is gone. I got to make my video on real estate. I don't like flight to safety stocks. Let me put it that way. They will not be flight to safety for long if we keep going on a bear market. Do you think ARK ETFs will see a bounce? Dude, nothing's going to bounce until J-Power inflation U-turns. Oh my gosh, dude. Oh, come on, man. Okay, Fed Speaks coming out. Kashkari, Neil Kashkari, literally just said, quote, "We don't know how many interest rate hikes it will take." Damn it. That's the kind of stuff. Now people are going to go, oh, crap. You're saying it's going to have to be worse. Yeah, seriously. When they raise rates 0.5%, you think businesses and consumers are going to stop spending money? Come on, man. Come on, man. Everyone's making fun of me for having sold, okay? I am the butt of everybody's joke. And it hurts right now. It hurts. But I'm tired of listening to what other creators are telling me to do. F them. Okay. So Apple 3.4. Good stability on Apple still. That's very important. And a firm went back positive. Good. DocuSign. Okay, we're gonna hit the news too. DocuSign 110. I mean, that smashed its temporary floor over here at the 130s. It got bad. That is bad. SPY is actually worse right now. It's down 0.6 right now. Look at that trend down. This consolidation means we're going to end up breaking to one of these lines. Listen, I get nervous when we start breaking this, like officially. We broke it on Monday, but we did not get a full hour candlestick below this line, okay? Write it down, folks. Write it down. The 426.88 line. If we get a full candlestick under 426.88 on the SPY, I get more nervous. And I don't even know how much more nervous I can get. Okay. Alibaba down 1%. I mean, it's also been on this dramatic downtrend here. I really think it's just shocking though how much NEO is falling. I look at this candlestick. I mean, it's worse than ever. I mean, we haven't seen NEO at this price since what, like November of 2020? No, like actually wait, yeah, here we go. August of 2020. And you had a year and a half of gains are gone. Look at that. Buy the dips getting shaken out on Hood already. We'll see. Matterport, 10%. Gosh, it's terrible. Okay, Lucid's got a little short-term uptrend here. Wow, how does Shift go down another 5%? Enphase, 4.5. Wow. Wow. Okay, all right. We gotta look at a little bit more news here. Usually I end the live stream around this time, but I gotta look at the news. Oh my gosh, I don't really want to though. That Kashkari update I don't like. Because that's also, that Kashkari update is also the Federal Reserve basically telling us, yeah, we've U-turned, like we got to deal with inflation really badly, but honestly, we don't know what to do. That's bad. That's really bad. Anyway. Okay. So what else? Okay. Robinhood is the worst major IPO since pandemic. Yeah, tell me about it. BlackRock Steel says the Fed risks a hawkish policy mistake. That is exactly what I'm worried about. Let me see here what they're saying here. BlackRock's chief fixed income strategist warns the Federal Reserve risks a hawkish mistake as it strives to extinguish inflation largely caused by the chaos in global supply chains. Hiking rates aggressively risks undercutting the recovery. Keep in mind, this, by the way, is also what the International Monetary Fund said. Like, numerous folks have come out from these funds and have said, hey, like, be careful. Like, you could totally over tighten here. Okay. According to, it's Scott Thiel, not Peter Thiel. Oh, sorry, my bad. The Fed's chair, Jay Powell, wrapped up a 2-day policy meeting this week by endorsing the rate liftoff. And they say this is a restart, not a recovery. The economy will slow down more quickly as we get back to potential. What's more, the primary driver of inflation is constrained supply, not an overheating economy. The risk of a policy mistake and over-tightening is increasing. That's an interesting argument, that you don't necessarily have to constrain the economy, that instead you just have to fix supply chains. But supply chains are going to take until 2023 to fix, and the Fed believes the economy is overheating. So either way, that's both bad news. Neil Kashkari, inflation is higher than he expected, lasting longer, expecting inflation to start to normalize at some point this year, expects the Fed to hike rates in March. Oh, jeez. Yeah. And that's why the yield curve is inverting. The yield curve was stable until the Fed meeting. Wall Street briefed by Biden team on possible Russia sanctions. Okay. Is this the end? It's the end of American equity outperformance. Is Lucid puts too late? I don't know. It depends. Somebody here says, I made 50K with you and 2 weeks later to 100K. Nice. Congratulations. Meet Diamond Balls Kevin. Hell yeah. $20 for. Thank you. Shout out to Emotional Mantis for saying Diamond Balls. Hell yeah. Alejandro, $30. Thank you so much. All right. Briefly looking at the sticks again here. And then I'll look at FT and some of these. Okay. Enphase still struggling to find a bottom. Brief little U-turn here. Roblox stable. Matterport, Lucid stable. Oh, SoFi has now visited the bottom. I think Robinhood's actually going back to recovering. Oh yeah, look at that. It's only down 3% right now. Oops, that's not Robinhood. That's a nice second win there by the dip. Look at that. That's a nice second win to buy the dip. Still makes me nervous. We know brokerage revenues in decline. I hope they come out with the crypto wallets though, and it just U-turns. But anyway, okay, Neo's trying to find that bottom. But SoFi, what is SoFi doing? What is the darn thing? I think the Robinhood move is also hurting SoFi. Yeah, okay, Robinhood's trying to find its bottom at $10.51. Ugh. Visa's holding up. Visa out of everything today has not really been moving to the downside. Apple at 3.7 has also been relatively stable. And let's see Tesla here. Tesla's recovering too. Back to 820 right now. That's good. That's good. The end of the day is going to be what's critical. SPY. SPY, good. What did I say? If we're consolidating, we're going to end up breaking to either the top or the bottom. And that's important. That's good. We're getting the good move. I'm surprised with what Kashkari is saying, but okay. All right. Let's go do a little bit of hunting. Wall Street Journal. No, actually, look at the FT. I already read the Wall Street Journal. I already kind of I try to give summaries at the beginning of everything I've read. White House prepares on Supreme Court. Okay. Would you buy a home in the metaverse? I do want to read into Chevron's earnings, but not right now. No, not much dramatic here. Let's try Bloomberg. $5 donation for $coin. Thank you. Yeah, $coin probably. I mean, the coin should be at some of its lowest prices right now. Let's see here. Oh my gosh, 165. Oh lordy, lowest ever. Ugh, it's terrible. All right, and bipartisan bad idea. Bomb cyclone, blizzard. Investors turn to Europe. Oh, that's interesting because Europe is still wanting to remain accommodative, right? The European Union wants to remain accommodative. The problem is I'm pretty sure you still got negative yielding bonds and an environment that is quite deflationary. But anyway, Goldman Sachs surveyed the audience at its annual Global Strategy Conference this month about which stocks will be the world's champions this year, and Europe emerged as the unlikely winner. Wow. Since then, equity markets have experienced a major sell-off, putting them on track for the worst month since March 2020 and locked horns with the Fed. But the faith of investors in Europe's potential as a safe harbor in turbulent waters remains intact. The European stock market seems more attractive in terms of valuation and less sensitive to price readjustments caused by the normalization of interest rates by the Fed. Oh, well, we'll see. Because if the Fed does push us into recession, there's no more safe haven, except for shorts. But anyway, that's interesting. I'm going to dive into that a little bit more. Tesla turned green. That's good news. That's good news. Remember, we want to push for green towards the end of the day. We want to end green. That's important. Because it's Fed rate hike week, right? Or well, Fed meeting week. And if we end on a positive note, that's good. That'll help move sentiments. Made enough, $10 donation, made enough in 3 years to listen to you, made enough in 3 years listening to you to pay off my house, buy a new car for my wife in cash, and I'm actively looking for my first rental property. That's amazing. Congratulations. Frugal Preppers Garage and Garden. That's super cool. Okay. Shipping stock should be rallying. All right, good. So hopefully we're moving off a bottom here and it's lasting. The S&P 500 was down about 0.63. We got a nice move back to this. We've played this game. We've played this song before. We've played this before. Look at the pre-market. We literally did the same thing. Ran above, only to come back under. We did the same thing yesterday. It's over and over and over again. We got to get some real confirmations above this line to actually have faith in temporary rallies. And quite frankly, I don't really believe any of these day rallies are anything but an opportunity for more shorting, and which now is the time to set up shorts on higher flyers if you wanted to. Not recommending you do that, but just saying, because your pricing is going to be best when the pricing's high, right? They have the most to fall then. But anyway, we'll see what happens here. Looks like Lucid right now also recovering, which is good. So tentatively looks like we had about a 7 o'clock bottom. Last 15 minutes, we've had a little bit of a recovery here. SoFi took about an extra 10 minutes to hit bottom. Matterport respecting that bottom roughly right now as well. But you got to ask yourself, what's the good news this is rallying on? I don't know. I don't think so. I mean, we've looked at all the news, and for the outlook, it's not long-term good news. Little short-term fake outs. Dude, what? Oh, okay. I thought Palantir was at 8 for a second. It's at 12, which is still very bad, low. Thank you. Well, thank you so much for the donation here and happy birthday wish. Thank you. Palantir, $2. Sorry, 2.3% down at $12. Boeing, 185. Didn't Boeing go to like 300 at one point? Oh, 278. And then, of course, it was over 300 pre-pandemic. Okay, good. So a little bit of a recovery here. This is good. Hope it goes because it'd be very good to end this disastrous week on a positive note. And Tesla's almost green. And it is trending that way. It's up. It's only down about 0.4% right now, which is good. It was down as much as 3 to 4% earlier. Which is quite painful. I mean, it fell under 800. But anyhow, Apple also moving up right now. So hope that trend continues. If you believe it's going down more, then it's short time. Anyway, somebody here says the primary driver of inflation is printing money and issuing of new credit, not the supply chain. Supply chain issues are from the international ban of unvaccinated workers and the Great Resignation. Yeah, I mean, I don't think it's binary to where we could just say it's one or the other. I think it's probably it's a spectrum of both. Did I miss a cat? Oh, no, I'm just now going through these comments. Thank you for the $50 on Kevin Appreciation Day. Thank you. Why don't they use the National Guard to unclog issues at the ports? Yeah, well, I mean, one, you would have to have a president who believes that this is mission critical. And number two, I don't know if the issue is people or if it's trucks or warehouses or what. But you're right. I do believe there's more that can be done, and I believe we're underdoing that. Look at this. Art just donated $200. Happy birthday, Kevin. Thank you so much. You didn't have to do that. Appreciate that. Really, really cool. Happy B-Day. Thank you, Richard. Really appreciate it. Wow. Thoughts on cannabis in 2022? I would not rely on the government to bail us out. I know you're Mr. HITI, High Tide, which they did well after earnings. I don't know what they're doing now. They're actually green today, which not a lot's green today. But yeah, it's look. The best thing the Dems could do is actually just get something done. And marijuana should be like an easy pass, an easy win, but whatever. Happy birthday, F haters. Thank you. Put this donation money into a jar and save up for a gold bar. It's a rhyme. Thank you. Baby boomers retiring. What's the point of the baby boomers retiring? Let's work. Less workers. Thank you, Lola. You're here every day. Appreciate you. I'll see you. Sono. I don't know what Sonomoto's is. All right. So positivity in the market right now. Again, you want patience. As Warren Buffett says, patience gets rewarded. In my opinion, watch the tests. You know, I'd rather miss out on like a 3 to 5, even 10% rally than see my portfolio drop 30% again, and measuring from all-time highs, right? I mean, this was when, like, imagine a firm was like 270, right? I mean, things were so euphoric. But anyway, so Visa 6% stable here. Apple coming back, nice push here. Now you're getting the people with the flight to safety. You're getting the reaffirming here on some green for a firm. Etsy going positive. There's Tesla. Tesla made it positive. That's good. So let's hope the rally continues. That's going to be very important for the market today. We do not want to sell off into the close. So we'll watch it. Anyway, I'll see you at the close. SPY just went positive, so it's good. All right, folks. Time to go. Abdul, thank you for the $5. Thank you very much for saying that. Appreciate it. Thank you so much, Garrett. Appreciate it. All right, folks. We'll see you in the next one. Good luck out there.